David, the World Health Organization raising its global risk assessment for the coronavirus's spread and impact to very high, the same level as it's had for China since late January.
Advisor said as of this morning, the White House still believes that the threat of the virus in the United States is low, despite what you heard from the World Health Organization globally in that.
Yeah, Scott, and it's not just this correction where those powerful rallies that sometimes come after an intense decline are not necessarily trustworthy. That's the nature of these very sharp pullbacks. Take a look at the S&P 500 over the last 3 years to put this drop in some kind of context. We've been talking about this is the fastest 12% loss in history measured.
Laboratories as a part of the U.S. response to be able to monitor this new epidemic that's really becoming a pandemic pretty quickly.
Cessation in ticks on the S&P. That means the first circuit breaker
for whom the bell tolls
has been triggered.
Federal Reserve cutting interest rates by 50 basis points, making a surprise announcement of a 50 basis point rate cut. The Federal Reserve saying the coronavirus poses an evolving risk to economic activity, though the fundamentals of the U.S. economy remain strong. The statement.
The equities down and down hard. Thursday was the biggest drop since '87. Friday, the biggest pop since '08. And guess what? We're back down with futures limit down going into the cash open. In the equity market, we open up with the S&P 500 down around about 8%, and that is where we will pause now for around about 15 minutes. We'll open back up. Your next circuit breaker will be around about 13% lower.
We're getting lower by more than 8%. Of course, that greater than the 7% level that triggers the level 1 circuit breaker. That means we will not trade again until 9:45. We will see if we can come off of those lows. Same for the Dow.
We saw our third trading halt in just 6 sessions right at the open, a 15-minute halt with the S&P down 7%. Now, like the 2 other halts, it did produce a brief
Witness today. That was brutal.
Obviously brutal. I mean, the markets rushed toward a place to say we have to start handicapping the probabilities of a recession in this country.
The moves in the bond market do not make sense. I mean, there's no way the U.S. 10-year note should move 0.5% in a day, let alone 28% in one day. Now, for weeks, I think it's somewhat of a fool's errand to try to do that now, although, as a lot of people have mentioned, that December low is obviously right in the crosshair.
There I hear the opening bell, of course, ringing for the New York Stock Exchange. Empty floor. Trading will be as normal. The NASDAQ as well, of course.